This idea and concept of not using stablecoins to trade against is quite interesting, and Cogito Protocol are doing something quite interesting in using a new idea and concept called Tracercoins. And these Tracercoins work in a similar way to stablecoins, but instead of being pegged to a fiat currency such as the US dollar, which is subject to inflation, it instead pegs itself to a benchmark of some sort, which has a lower rate of inflation and a lot more stable and isn't controlled by regulations or by government itself. So this Tracer coin is quite interesting in how it works and a new innovative way that we could trade in the cryptocurrency space. I have the CEO of Cogito, Cloris Chen, joining me on this episode to talk all about the ideas, concepts, and the mechanics around how it works. And I have Nahid Ibrahimzade joining me from Genius X to talk about the Cogito Protocol token sale, which is happening on their launchpad. All the details around it. It's come up very soon on the 29th of May. It only lasts for 24 hours as well. I have all the details for it in the show notes down below for you and on our blog post for it on the Learn Cardano website. So please check that out, along with all the details around this interview. Let's get into it.
Yeah, gotta do it like that. You've been listening to the Learn Cardano podcast. Gotta get it hype. Crypto is what we like, but this is not investment or financial advice. Gotta do your research, cause it's risky. We know it is. This show is educational and it's informative. Crypto's the future, really, it ain't no debate.
Hello everyone, this is Cloris. I'm the CEO of Cogito Protocol. So we are a stablecoin project that is a spin-off from SingularityNet, which is the largest AI company in the space. And I come from banking background. I used to work in HSBC for 6 years from the corporate banking sector. And I joined Cogito a year ago after connecting with Janet and Ben, and then Cogito as a stablecoin project is actually Ben's great idea. He's always the mastermind behind, all the SingularityNet spin-offs. And I was brought in to, execute and implement this idea because of my background in finance and overall crypto industries.
And what about yourself, Nahid? How did you get into this space and what's your background?
I'm actually coming from traditional finance, but, as similar to Cloris' story, I realized this is a place that, like a specific decentralized finance, that was my always an interest. And that's why also I'm working at Genius X as an accelerator program manager since last year. And, for me, it was very special that specifically the Cardano environment and all this like an atmosphere and all this like a blockchain technology, that since it's based on also like, the technology that Bitcoin based on, but more extended version of it. So that's why that was very kind of the catching point for me, and the technology itself. And of course at Genius X, we are, as you might know, we are helping and also trying to find new projects always so that we can accelerate them. And we are providing blockchain agnostic services, including marketing, kind of tokenomics, and also a couple of other services, and of course launchpad and sale, and helping them also to get some funding, which is unfortunately a little bit difficult with current market situations. But still we are also kind of helping projects, and there are some of them which got successful in the past months and year. So it's always kind of ongoing process. We are always on the lookout now on new projects. We are also extending to other blockchains. That's as part of our services, we are becoming blockchain agnostic. I think services we offer can be actually done in all of the blockchains at the moment. And since this year, I believe, and also next year in the coming years, interoperability will be very main topic. That's why we are also already preparing for that and trying to have projects across different blockchains so that, the market is now kind of in bearish. Once it becomes again bullish, we're having a portfolio of projects that we are supporting from all different blockchains.
It's definitely a bear market, and hopefully this does turn around eventually soon. Especially when we're trying to raise funds and grow the ecosystem in general. It's a very, very rough time at the moment for many projects trying to grow. let's
Definitely.
dive into the protocol itself, Cogito, and to understand exactly the problem that you guys are trying to solve here and what the solution is. Cloris, can we get an explanation of it?
So first of all, our offering is a stablecoin that is not pegged to fiat, right? So the main reason that we are doing such a product is that currently in the entire crypto space, 99% of the stablecoins are pegged to US dollar. So we already see like what has happened to all these centralized currency pegged stablecoins, like BUSD is targeted by this SEC, USDC DPEG, and then USDT, with their the issue with transparency, et cetera, et cetera. So we are in a time where the market is in great need of a truly decentralized and independent measure of value, right? So this is what we are trying to offer. Like when we are talking about stablecoins, the very key question that I want to bring up is why do we have to peg to US dollar? Like, what's the big deal of not pegging to it, but it is still stable? So there's no big deal. So it's actually totally doable. That was actually the very, initial reason why, initial mission that people kind of had for Bitcoin, right? They expected Bitcoin to be the money of the blockchain, except that it didn't really work out because of the volatility. But now we are introducing our stable coin, which solves the volatility issue and is still independent from fiat. So that's a great way to actually become the payment currency on blockchain. So we think it's a great experiment, and we will very we look forward to see how it turns out. So that's the main issue that we want to solve here. Not exposed directly to the centralized fiat. That's less regulatory risk, and also because we're not pegged to US dollar, we have less of inflation here. Right now the inflation rate is super high, right? So these are the solutions that we are trying to bring to the market.
Yes, I totally understand those concepts, especially when you're trying to fight inflation. So one thing, crypto markets, like certain currencies inflate themselves, but then when you're converting back to a fiat, you're finding the US dollar inflating and losing its value too. So I completely understand that. The only thing I think a lot of people will try and struggle with is like the idea of no longer using the US dollar and wrapping their heads around that. I think the very first time when I heard about the protocol, it's like, really? We're not going to use fiat? So how are people going to transition from that? It's a very different concept.
I would say yes, it is definitely very different because like everyone is so used to stablecoins pegged to US dollar. But this is the concept that I have been trying to ask back to everybody that has the issue, like why can't it be a stablecoin if it's not pegged to US dollar? The question is, why does it have to peg to US dollar? Like, I don't know where you guys based, right? So I have been in many countries. So there are so many countries have like basically every country has their own currency: pound, euro, RMB, Aussie, US dollar. Like they're not pegged to US dollar. Like RMB is not pegged to US dollar. Euro is not pegged to US dollar. Why do they still use those currencies, right? Simple question like that. Like, yes, we are not pegged to fiat. We're not pegged to US dollar. Then why can't this stablecoin not be a stablecoin in its own term, like be a payment method on crypto? Yeah. So this same, I think, maybe probably a few years ago, people were saying, oh, Ethereum is stable to itself, right? Well, you can say that Bitcoin is stable to itself, except that because the volatility against US dollar is still there. So in terms of like real adoption, for example, facilitating transaction is still pretty unrealistic. But here we are having the upside of Bitcoin and Ethereum as the independence, right? But on the other hand, we are maintaining our value relatively stable to US dollar, even though we are not pegged to US dollar. So that's basically like a combination of the both sides, like on the upside side, right? So that's the key concept we are trying to bring to the community. No, we don't need to peg to US dollar to become a stable coin.
That's really interesting. I think like for anyone that's trading cryptocurrencies, they always need some sort of reference point, and I think that's why the US dollar is quite easy. I'm here in Australia, so it's easy enough to convert and realize how much value a certain token is when trading. So I think that's the paradigm shift there, and the other thing there is having some sort of trace-backed value and industry or indice as what you guys do to track and keep the value of the Tracer coin. This is also another really interesting concept, and I'm still trying to wrap my head around that. Like, how do you track the value of something that doesn't track on a fiat currency?
Sure. Yeah, so actually before I answer how do we track the non-financial indices, so I want to comment a little bit on, you mentioned like you have Australian dollars and then you always want to see how much you can convert to US dollar, right? So that conversion rate here is the foreign exchange rate that we are referring to, right? So for us, if you look at our Tracer coin, our stable coins, you will see exchange rate with US dollar as well. And it will be around like, for example, 1.02, 1.01 or 1.02 because of the nature of the stability of our coins. So that's the exchange rate that we are looking at. So it still serves as the stable coin, and then it just considers that as an independent currency here.
Yeah. So if that then is still almost at the value of the US dollar, then doesn't that also kind of follow the inflation of the US dollar? Like, shouldn't we see in like 10, 20 years time that shift and have a more of a differentiation, because the US dollar in theory would have inflated a lot more than maybe?
Yes, so this is actually related to your previous question, like how do we track the indexes? So I do want to elaborate a bit more on how our first stablecoin, which we call G coin or green coin, is working. So the way that it works is we first of all create a green index. That's a non-financial index. We source a bunch of data, feed it in our model, produce this index that tracks the positive progress towards a green economy. Yeah, so this is the benchmark. So this green index, according to our historical data, appreciates about 1% to 2% per year. So that's the volatility that we're talking about. And then our green coin is created to peg to this green index on one-to-one basis. So for example, at launch, our green coin will be worth $1. Next year, because green index has appreciated to 102, and then our green coin should be worth 102. And then let's say the year after, it should be 102 times 1.02, right? So this answers Peter's question, like, okay, shouldn't it like appreciate and go, diverge from US dollar? That's the diverge that we're talking about. And then there are two main questions that we are trying to answer here. First is, what is a reasonable rate that we can diverge from the US dollar, right? Like we are talking about inflation. Inflation can go up at 6-7%. Can we promise our community saying that, oh, don't worry, just buy our G coin and we will offer you promise you 6% to 7% yield? Unfortunately, we cannot do that, because like I cannot just pull out the number out of my head, right? So whatever number we can actually offer is based on a model, it's based on testing, quantitative modeling that we have done. So what we have done is that, okay, 2% per year is achievable. If we are promising 6% to you, we are probably lying. So that's the reason that the rates that we are diverting against the US dollar. This is the first question. Second question is, how do we maintain the peg from the between the green coin and then the green index? So first of all, the green index itself is not backing our value, right? So it's just a benchmark there for us to peg to. So what actually backs the value of our green coin is the collateral behind it. So when users come to mint our green coin, they need to deposit their assets with us, which becomes our treasury. And then we will diversify the treasury. We will, for example, diversify into some sort of at our first version, like this will be transition. There will be transitional phrase, of course, but at the beginning we might accept many other stable coins, and then we might introduce gradually other like volatile assets into our treasury, and then we try to manage the treasury in order to match the movement of the green index. And then from day-to-day trading perspective, if there are like depeg happening between the green index and green coin, we will have sufficient liquid reserve to defend the peg. So basically, we can go into the market, buy or sell, mint or burn, right, to maintain the peg. So that part is basically the same with how USDC defends their peg, and then other like fully collateralized stablecoins defend their peg. We are doing the exact same thing, except that we are introducing the AI models into our design. So, we are a spin-off from SingularityNet, right? So we actually have been talking about like using AI models for the treasury management, for the stabilization for about a year now. But actually, because, AI really becomes more of a sexy topic only after ChatGPT. Before that, people were like, AI. And now people are like, wow, AI, that kind of different change. But we never changed. We have been doing the same thing. So we have been SingularityNet has been researching on the AI models in the back, and we have been, implementing these models into our design. So what does that actually do for us? So the main purpose here, so first of all, when it comes to our treasury management, it helps us to actually be able to generate the yield that, the green index can present, right? So like, for example, 2%, which is pretty achievable right now in the crypto market. Second is we are able to defend the peg more efficiently. For example, like as we know, the naive way, right, is that when it depicts the when the green coin depicts from the green index, we buy or sell. But like, when do we decide to buy, and at what price do we decide to buy? Like, how quickly can we buy or sell? So that's basically can be driven by the models as well. So that helps us to respond much faster, and also like with less capital deployment as well. So basically, this is where the AIs can come into play. So that's what I meant. Like, yeah, in terms of our stabilization mechanism, we are on an improved version of other fully collateralized stablecoins.
That is super, super interesting. I did wonder how the value of the coin would be moving against like a benchmark. Like the green index is essentially just data, isn't it? It's just data from different sources of CO2 emissions, whatever it is, and it's just a number of measure. Okay, but based on historic data, it's gone 1-2% growth every year. Okay. Now, the other thing that you did mention there was the collateralization. And you mentioned stablecoins at the moment, but then also maybe in the future, more volatile assets, other cryptocurrencies. When I hear that, I always get worried because I'm assuming it's going to be quite over collateralized, so you can deal with the volatility. Is that correct?
Yeah, that is absolutely correct. So also this is the way, there is where we also improve a little bit from the existing version where we take into consideration of collateral. So, different projects include different assets into their treasury, right? And then there are certain things to consider. For example, what is the volatility that one can expect? Second is like, what is the, that's volatility, right? Second is, what is the liquidity? For example, in the case where we'll have to liquidate our treasury to defend the peg, are we really able to recover whatever the market value it is? Most of the time it's not, right? So the way that we measure it is that instead of setting a fixed offer collateralization ratio, for example, 120%, 110%, like some projects are doing, or instead of like only look at the market value, which basically does not really mean the effective liquidity, right? So we take into account of the risk factor of each collateral. So for example, if we are including ADA into our treasury, which basically is in our roadmap on Cardano, our first implementation might include ADA. So we will apply a risk factor on ADA. For example, if we have $100 worth of ADA, we might only be able to mint $85 worth of Gcoin. And another example is, we are not talking about including AGIX yet, but let me take this as an example. If we are including AGIX as our treasury, first of all, of course, we will consider like what is the maximal cap, 1%, 2%, we don't know yet. I'm just making an example here. We might apply 40% risk factor on AGIX because it's like more of a smaller cap, and the liquidity is not as good as ADA. So there are a bunch of other considerations as well. So this is the risk assessment process that we are doing. So after combining all of this, we introduce this concept called capital adequacy ratio, which is basically a risk-weighted reserve. So you traditional like the other stablecoins, for example, DAI or USDC, which we will introduce in the first phrase, because I mean there is centralization issue, but we need a transitional time, right? So when we introduce that, maybe we don't apply any risk factor on that, but if we start to introduce other risky assets, we apply different risk factors to each one of them, so that our capital adequacy ratio can still maintain above 100%. That's the meaningful number that we are looking at. So, Peter, when you're saying that whenever people include volatile assets, you always get concerned. Same here in crypto, because we are still in infancy time, right? We cannot run under a very low collateral ratio, not to mention like Luna's case where they include their own native token as a collateral, right? So this is also like a common question that I got.
Just about to mention that.
Yeah, so a common question that I got from the audience is that, okay, do you guys include CGV tokens? CGV tokens are governance token, yeah? So will you include your CGV tokens as a collateral? Absolutely not. A simple reason, I mean, even without Luna, we would not do such a thing because they're so highly correlated. If Gcoin fails, CGV fails. If CGV fails, Gcoin fails. Why do we want to introduce the dependencies here, right? Doesn't make sense. So not to mention that we have learned that from Luna. So I guess I answered your question before you asked it.
Yeah, very much so. But it's really good to have that validated and mentioned in the interview as well. So we know that there's no direct correlation between the token and the protocol itself.
Yeah.
Now, and with all of that data and information, it's actually so important that you do have AI in the background there to track everything, do the risk management. You'd be hiring a massive team to look over all the portfolio and all the collateral that is coming in. So AI is very important here.
This actually makes a lot of sense, even before AI becomes a sexy topic in crypto. Like the other stablecoins are not doing it. It's kind of unexpected. Like you can totally see how these AI models can be used in, managing the treasuries, helping with the risk management, et cetera, right? So I'm surprised that nobody has been doing that. And we are at this advantage of doing that because of Singularity Net, right? So we have a big team behind us that helps us support us with the research, with the models, et cetera. Yeah. So as you mentioned, there must be a big team looking after that. Definitely. Yes.
So what are the details for this token sale? How do we participate? I'm assuming there's regulatory confinements around this. Nahid, you might be the best to answer this.
Like the sale will start on 29th of May, and it will be running for 24 hours. That's very important. And, also we received a couple of questions regarding the cliff and also the kind of vesting period, because it's very important for the stable price of the token. So if there will be a cliff period, so it means that nothing can happen during this time, so for 3 months, and then there will be monthly linear unlock over 18 months. So this is quite important for the price stability after the sale, because if you unlock all the tokens just after the sale, it might cause certain fluctuation, because since you provide all the supply to the market, it might be kind of at the end, of course, there is the inherent, it's governance token, so that's why there is value of this token. But if you have higher supply, but as you're in bear market, it's less demand. So having this higher supply might cause huge kind of fluctuation in the price, especially in the beginning. So that's why, in order to avoid it, especially after the sale, we'll be having 3 months cliff and 18 months of linear, kind of period where you could basically claim the tokens from the protocol. So it's very important. And, these are also details I believe most of the people who are looking to this sale are basically looking forward. Just to reiterate, it will be starting on 29th of May. It will be lasting for 24 hours. So if you want to make a decision, you will be kindly asked to make a decision during this 24 hours. and it will be finalizing on 30th of May. So these are also kind of details I would like to share with you regarding the upcoming sale.
That is a very short time frame to allow people to buy into the coin there. I'm assuming we can KYC and prep ourselves beforehand already.
Yes. I mean, you can definitely do KYC. And also, to be honest, that's a valid point. But we also noticed that usually if you are buying and if you make a decision to buy, usually it's already happening in the first 24 hours. The rest, you might think that it will be adding something, but actually it really doesn't. You know, if you're making a decision, we realize that, I mean, because we had a couple of previous sales and we were offering longer periods for buying, but we realize actually longer period doesn't necessarily mean that there will be more buyers. So that's why we want to kind of keep it for 24 hours. And already we announced it like not very, let's say, a couple of 4 weeks in advance. So we gave some time people to investigate and, you know, search for the project and make them familiar with. We provide all the details. And, you know, the sale only, this process only happening for 24 hours. But we always allow enough time for community to make their decisions and, you know, make their mind in advance.
We are having this Cardano exclusive sales, right, with Genius X, which shows our commitment to Cardano community for sure. And one major difference here is on any of other launchpads, we don't accept anything except stablecoins. For example, USDC or USDT or BUSD, whatever they prefer to choose. But on Cardano, we accept ADA. The main reason that we choose ADA is because we want to hold ADA in our treasury as well. And then that also contributes to the short-term period as well, because like ADA has like price volatility here, so we want to contain the price movement within a shorter time. So that's why we have a 24 hours window here, so that users are easy to monitor the price participation price as well. So that's for the very realistic consideration as well. Yeah.
Exactly. And also regarding KYC, it's already open now. You know, if anybody would like to already participate in KYC, they will feel free to basically do the KYC already now. They don't need to wait for this 24 hours time frame.
Okay, you mentioned that this is going to be an exclusive sale for the Cardano community at the moment. So there's no other sale at the same time on other chains? Just want to clarify that.
No, I figure that was misleading. So it was not... it has other sales. I'm saying that with Genius X to offer exclusively on Cardano. So Genius only cater for Cardano community. Yeah.
Okay, so you are having other sales on other launchpads at the same time, or is it?
Yeah, BSC accepting stablecoins. Yeah.
Now, just to be clear, people are buying the governance token for the protocol and not this G coin, that the stable coin that's coming out. That comes later when you actually use the protocol. Is that correct?
That is correct. Our governance token is called CGB, or short for Cogito Governance Token. Yeah.
Excellent. Now, that's purely governance token for participation in voting, protocol changes, et cetera, or is there any other utility behind it that we need to know about?
Yeah, I can quickly walk the community through the utilities. So we have a lot of functionalities with this governance token or utility token. So for example, as I shared earlier, we will have this index, right? So the index management will be subject to governance. For example, like if we want to adjust the index component or weights. Another one is about the minting and redemption policies for Tracercoins. Right now, we have a preset parameters of the minting fee and redemption fee, etc., and then that can be changed subject to governance vote. And then third one is treasury management. I mentioned like after we have the collateral from the users, so we'll be diversifying the collaterals into different portfolio, and then the token holders will have a say in terms of what kind of tokens can be included in their treasury, like capped at what level, and those kind of decisions. And more in the medium to long term, for example, if we want to launch new Tracercoins, name one example as Xcoin, which is written in a roadmap, which tracks the technological progress. If we want to launch new Tracercoins, so the community can also vote on that. And another one, the final one that I want to mention, which many people are curious about, is about buyback and burn mechanism. For example, like as time goes by, we may want to be able to buy back the tokens from the market and burn it to reduce the circulating supply. So this kind of mechanisms can also be voted on in terms of like, okay, how we want to implement that. So these are all the utilities that come along with the utility token. Yeah.
So now that we have a really broad overview of the protocol, the token sale, and everything else, where's the best points of contact, and where should we find out more information about it all?
So if communities have any questions about the project, you can join our Telegram and then shoot questions, and then we will address the questions directly. Or you can follow our Twitter, or you can simply write to us at team@cogitoprotocol.com. And I believe, Nahid, you can mention like if they want to ask TGE related questions. Yeah.
Exactly. And also, you can just head over to our launchpad at Unisex. So in due time, you will just need to connect your wallet there. Maybe you have already participated in the previous sale, but if you have not done so, that's quite easy. You can just connect your wallet. And then, if you have Cardano native wallet, you will be, once you do the KYC, as I mentioned before, then you will be able to basically buy the commit there. And then within 24 hours, that will be kind of closed. So you will also find there much more details about the project. And as I mentioned, we always want our committee to make educated decisions. So that's why we're also providing comprehensive information about the project in our sale page also.
I'd just like to thank you both, Cloris, Nahid. Thank you for joining me on this episode to talk all about the Cogito protocol and learning more about it and sharing it with the community.
Cool. Thank you very much for hosting us.
Hopefully you guys got something out of this. I certainly did. I've got the whole brand new concept around Tracercoins and how they can work in the cryptocurrency space and how it can protect yourself against inflation from fiat currencies. So it's pretty cool how that all works. Now, if you want to find out more details about the upcoming token sale, all the links are down below for you. You can find out more information on the Genius X Launchpad website too. Now, if you really enjoyed this content, if you really enjoy Cardano related content, that is, please make sure you give me that thumbs up, click subscribe, click on the notification bell. You'll get notified as soon as more content comes out all around the Cardano ecosystem. And now branching off to a couple of outreaching ecosystems as well. I'll see you in the next video.
Yeah, gotta do it like that. You've been listening to the Learn Cardano podcast. Gotta get it hype. Crypto is what we like, but this is not investment or financial advice. Gotta do your research, cause it's risky. We know it is. This show is educational and it's informative. Crypto's the future, really, it ain't no debate.